Welcome to XRP On Moon, where we break down the real movements behind XRP institutional signals and the narratives shaping the next phase of crypto markets. Right now, XRP has captured attention again after posting a 6.4% gain, and at the same time, a powerful discussion is circulating in financial circles about whether major institutions like Goldman Sachs are quietly exploring Ripple-related treasury and settlement frameworks. Whether this is early speculation or the beginning of something much larger, the timing of these developments is exactly what makes this moment important for traders and long-term observers alike. The recent 6.4% move in XRP didn't appear out of nowhere. It came after a period where the market was tightening, volatility was shrinking, and price action was moving sideways in a compressed structure. In crypto markets, this kind of behavior is often seen before expansion phases. When liquidity dries up and price stops making aggressive moves in either direction, it usually signals that the market is preparing for a stronger directional shift. The key detail here is not just the percentage gain itself, but the context in which it happened. Volume started to increase subtly, suggesting that interest was returning beneath the surface, even before the breakout became visible to the broader market. This is where XRP starts to behave differently compared to many other digital assets. It often shows long consolidation phases followed by sudden expansions, especially when sentiment shifts from uncertainty to renewed interest. Traders who closely monitor XRP cycles know that these early moves are rarely random. They often represent positioning by stronger market participants who accumulate during quiet phases, while retail attention is still low or undecided. That gradual accumulation creates pressure, and when momentum finally shifts, price reacts quickly. At the same time, the institutional narrative around blockchain-based settlement systems continues to evolve. While there is no confirmed official announcement regarding Goldman Sachs directly integrating Ripple's technology, the fact that such conversations are even being discussed in broader financial and crypto analysis circles is significant. Large institutions do not move based on hype. They move based on efficiency, cost reduction, and settlement improvements. Ripple's core focus on cross-border liquidity and treasury optimization naturally places it within that conversation space, even if indirectly at this stage. What makes this moment even more interesting is how market psychology is reacting. XRP's recent price movement has reignited discussions across trading communities, social platforms, and analyst circles. Sentiment is slowly shifting from passive observation back to active engagement. When this happens alongside rising institutional curiosity, markets often enter a phase where expectations begin to build faster than actual confirmations. In other words, price starts reflecting future possibilities rather than current realities. The combination of a 6.4% price increase, tightening market structure, and growing institutional discussion creates a layered scenario where both technical and narrative forces are aligning. This doesn't guarantee any specific outcome, but it does suggest that XRP is entering a phase where attention is increasing from multiple directions at once. Historically, these are the conditions where larger market moves begin forming, not necessarily immediately, but gradually as momentum builds beneath the surface. The interesting part about XRP's current move is that it is not happening in a vacuum. A 6.4% gain on its own might look like a normal market fluctuation, but when you place it inside the broader structure of crypto liquidity cycles, it starts to look more meaningful. XRP has spent a considerable amount of time moving within tight ranges, and that kind of compression often builds hidden pressure in the market. When price stops reacting strongly in either direction, it usually means that both buyers and sellers are waiting for a trigger, and once that trigger appears, movement tends to accelerate quickly in one direction. What makes this phase particularly important is the behavior of liquidity. In crypto markets, liquidity is the fuel that drives price expansion. During quiet phases, like the one XRP recently experienced, liquidity often gets absorbed gradually by larger participants. This is not something that shows up clearly on the surface, but it becomes visible when volume patterns start shifting. The early signs of XRP's recent push suggest that liquidity may have started rotating back into the asset after a period of hesitation. That rotation is what often leads to short bursts of momentum, like the 6.4% gain we are seeing now. At the same time, institutional sentiment continues to play a growing role in shaping expectations. Even though there is no confirmed integration between Goldman Sachs and Ripple's treasury systems, The market is reacting to the broader idea of traditional finance gradually exploring blockchain infrastructure. Large institutions are constantly evaluating settlement efficiency, cross-border payment speed, and treasury optimization tools. Ripple's technology has long positioned itself in that exact category of financial infrastructure, which is why it repeatedly appears in these discussions, even when no formal announcement exists. This is where narrative and price action start interacting with each other. In financial markets, narratives don't just describe reality. They often influence it. When traders begin to believe that institutional adoption could expand in the future, they start positioning early. That positioning creates demand, and demand drives price. Once price begins to move, it attracts more attention, which then reinforces the narrative. This feedback loop is one of the most powerful forces in crypto markets, and XRP has historically been sensitive to it. Another important factor right now is market psychology. After extended periods of consolidation, traders tend to become divided. Some lose interest completely, while others quietly accumulate in anticipation of a breakout. This division creates an environment where even moderate price movements can trigger strong emotional reactions. The recent XRP gain has already started to shift sentiment back toward curiosity and engagement, especially among traders who had been waiting for signs of renewed momentum. But the key question remains, is this early movement sustainable, or is it simply a short-term reaction within a larger sideways structure? To answer that, we need to look beyond the immediate chart and focus on how macro conditions, liquidity flow, and institutional narratives are aligning, because in many cases, the real move does not begin at the moment of confirmation. It begins when expectations start building quietly in the background, before the market fully realizes what is happening. It becomes clear that the real story is not just about a 6.4% price increase, but about how multiple layers of market behavior are beginning to overlap at the same time. In crypto markets, isolated moves are common, but synchronized developments across price action, sentiment, and institutional narrative are what usually define the early stages of a larger trend. XRP is now sitting in one of those sensitive zones where even small changes in liquidity or perception can have amplified effects. One of the key elements to understand here is how macro liquidity conditions influence assets like XRP. When global liquidity improves, risk assets tend to benefit first, especially those that already have strong speculative and narrative support. Even without direct confirmation of institutional adoption, the perception that large financial entities are exploring blockchain-based settlement systems can be enough to shift positioning behavior. This is because markets are forward-looking. They price potential outcomes long before they actually materialize. The discussion around Goldman Sachs and Ripple Treasury integration frameworks, whether confirmed or speculative, plays directly into this forward-looking behavior. Large financial institutions do not operate on short-term hype, but the market interprets their possible involvement as a signal of long-term validation. That interpretation is powerful because it changes how participants perceive risk. When perceived institutional interest increases, risk appetite often follows, especially among retail traders who are looking for early positioning opportunities. At the same time, XRP's technical structure is showing signs that align with early-stage momentum development. After extended consolidation, markets often enter a phase where price begins to test resistance levels more frequently. These tests are not random. They reflect underlying pressure building beneath the surface. Each attempt to push higher consumes available liquidity at resistance zones, and when that liquidity weakens, price can accelerate rapidly. The current 6.4% gain may be part of that early testing process, where the market is probing for strength and reaction. Sentiment is also beginning to shift in a noticeable way. During consolidation phases, attention typically fades, but as soon as price starts showing directional movement, engagement returns quickly. Social platforms, trading communities, and analyst discussions begin to reactivate, and that renewed attention feeds back into market momentum. XRP is now starting to experience this transition again, where interest is gradually rebuilding after a quieter phase. This is important because sentiment is not just emotional noise, it is part of the liquidity cycle itself. Another factor that cannot be ignored is how positioning behavior changes during these phases. Early movers often accumulate during low attention periods, while later participants enter after confirmation. If XRP continues to hold its momentum and attract more volume, it may signal that the market is transitioning from early accumulation to expansion preparation. However, if momentum fades quickly, it would suggest that the move was still within a broader range-bound structure. What makes this stage critical is that uncertainty is still dominant, but it is being challenged by emerging signals of strength. The balance between these two forces, uncertainty and emerging momentum, is often where the most volatile price action develops. Traders are essentially waiting for confirmation, but by the time confirmation becomes obvious, a significant portion of the move may already be in progress. The most important shift is not just happening on the chart, but in the way different layers of the market are starting to interact with each other. A 6.4% gain might still look modest in isolation, but when you place it inside a broader environment of tightening structure, returning volume, and renewed institutional discussion, it begins to represent something more layered. Markets rarely move in straight lines. They move in phases where perception slowly changes before price fully reflects that change. One of the most important dynamics right now is liquidity migration. In crypto markets, liquidity does not stay static. It moves between assets depending on risk appetite, narratives, and macro conditions. When attention begins to return to an asset like XRP after a consolidation phase, even small inflows can create visible price reactions because liquidity conditions are thinner compared to high activity periods. That is one of the reasons why relatively small percentage moves can feel more significant than they appear on paper. At the same time, the broader conversation around institutional infrastructure continues to evolve in the background. Even without confirmed partnerships, the idea of traditional financial institutions exploring blockchain-based treasury systems is reshaping how traders interpret assets like XRP. The mention of names such as Goldman Sachs in these discussions reflects more of a directional narrative in the market rather than a confirmed event. But in financial ecosystems, direction often matters more than immediate validation. If enough participants believe that institutional integration is a long-term possibility, positioning behavior begins to shift accordingly. This is where XRP becomes particularly interesting because it sits at the intersection of speculation and utility narrative. On one side, traders view it through short-term price action and volatility cycles. On the other side, long-term observers evaluate it based on its potential role in cross-border settlement efficiency and liquidity optimization systems. When both of these perspectives begin to align, even partially, it creates an environment where momentum can build faster than expected. Another key factor is how resistance levels behave during phases like this. In earlier consolidation periods, resistance zones act as strong barriers because market participation is balanced. But once sentiment begins to shift and buying pressure slowly increases, those same resistance levels start to weaken over time. Each test of resistance consumes liquidity, and each rejection or breakout adds new information to the market. The recent upward move suggests that XRP may be entering one of those transitional phases where resistance is being gradually challenged rather than strongly defended. At the same time, trader psychology is becoming more reactive again. During quiet phases, market participants tend to disengage, but as soon as price shows directional intent, attention returns quickly. This re-engagement is not always immediate or uniform, but it builds gradually as more participants start noticing the shift. The 6.4% gain acts as an initial trigger for that attention cycle, pulling XRP back into active discussion across trading communities and analysis spaces. However, the most important question remains unresolved. Is this the beginning of a broader expansion phase or simply a temporary reaction within a larger sideways structure? The answer depends on whether momentum continues to build alongside volume and whether liquidity inflows sustain themselves beyond short-term speculation. Without continuation, moves like this often fade back into consolidation. With continuation, they become the foundation of larger directional trends. At this point, everything around XRP is converging into a more sensitive market structure where small changes in momentum can start producing outsized reactions. The 6.4% gain is no longer just an isolated price move. It is now part of a broader shift in sentiment, liquidity behavior, and narrative positioning. When you combine tightening technical structure with returning attention and ongoing institutional speculation, the market begins to enter a phase where expectations matter almost as much as actual confirmation. One of the most important things to understand in this stage is how markets transition from disbelief to anticipation. During long consolidation periods, most participants either lose interest or assume the asset will continue ranging indefinitely. But underneath that surface, positioning quietly builds. If liquidity is being accumulated during this phase, then even modest increases in demand can trigger disproportionately strong moves. XRP has historically shown sensitivity to these types of transitions, where extended quiet phases eventually give way to sharp expansions once pressure is released. The discussion around Goldman Sachs and Ripple Treasury-related frameworks, whether interpreted as speculation or early-stage analysis, plays directly into this shift in expectations. Institutional narratives do not need immediate confirmation to influence markets. What matters more is whether traders believe that traditional financial systems are gradually moving toward blockchain-based efficiency models. XRP sits at a conceptual intersection of that idea, which is why it frequently re-enters conversation whenever institutional adoption themes gain traction across the broader crypto landscape. At the same time, market structure is becoming increasingly important. XRP is now in a zone where previous resistance levels are being revisited through renewed momentum. In many cases, these zones act as decision points. Either the market fails to sustain momentum and returns to consolidation, or it successfully builds enough strength to convert resistance into support. The behavior of volume during these retests will play a critical role in determining which path unfolds. Sustained volume expansion would suggest continuation potential, while fading volume would indicate that the move is still corrective within a larger range. Another key factor is how quickly sentiment can shift in crypto markets once price starts moving. The same traders who were inactive during consolidation phases often re-enter the market rapidly when momentum becomes visible. This creates a feedback loop where rising price attracts attention. Attention increases participation, and participation further supports price movement. XRP is now beginning to show early signs of this loop reactivating, though it is still in its initial stage rather than full acceleration. However, it is important to remain grounded in structure rather than narrative alone. While institutional speculation and bullish sentiment can support momentum, sustained trends require confirmation through consistent price behavior, not just expectations. Without follow-through, even strong narratives can fade into temporary spikes. The real test for XRP will be whether it can maintain higher lows and gradually build a stronger base above previous resistance zones. In the broader context, XRP is now sitting at a crossroads between continuation and consolidation. The 6.4% gain may either become the early spark of a larger expansion phase or remain a short-term reaction within a longer accumulation structure. What happens next will depend on whether liquidity continues to flow in, whether sentiment sustains itself beyond initial excitement, and whether market structure confirms strength over time. XRP is not just reacting to price movements. It is currently being shaped by a combination of technical pressure, shifting sentiment, and evolving institutional narratives. Whether this develops into a major breakout phase or settles back into consolidation will depend entirely on how these forces interact in the coming sessions. This content is for informational and educational purposes only and should not be considered financial or investment advice. Cryptocurrency markets are highly volatile and risky, and you should always conduct your own research and consult with a qualified financial advisor before making any investment decisions.